Welcome to Market Momentum Tutorials. This is number 7. It's an example trade. There's another example trade on the live system on another tutorial. Once you've finished this, please come to the website, listen to the video reports. You'll learn more from those.
Welcome to the tutorial on example trades. What we're going to show you here is how we use a combination of all three charts to create a trade. We could do the trades without all three, but it shows you the combination is a good idea. Now the conditions for this particular trade, this was the beginning of July 2009. It's the dollar yen. It was trading around 97 at the time, or thereabouts. Now the conditions were, we had a 2-day momentum range trend line going up here. The market was going to open below it, and in Tokyo it opened and broke that low value, which is the momentum range low value here, 96.60 on the opening, and in turn that confirmed the turn down in the diff. One of the other things we looked at when we looked at that was the fact that the diff was pointing down. We also had an ABC big A leg, an ABC big B leg, expected B leg, and we were looking for potential big C leg from a longer term trade. The fact that diff was already a confirmed turn down on the opening, and we'd opened below a 2-day momentum range and broken the low value. When it breaks the low value, it confirms the turn down. So 12 hours ahead of time, 18 hours ahead of time, we already knew this was a turn down right on the opening. So this was a sell, and a trade was put on a bounce back towards this 2-day momentum line in front of the swing level. The swing level is 96.91. The trade was put on at 96.75 with a stop in 10 ticks above the swing level at 97.01. The high on that day was 96.88. The market never got above the swing level, and sometimes it does penetrate through the swing level slightly. It generally tends to stay one side or t'other on the day, but it do get penetrations, and they do happen. But once the low value is broken, then any penetration is very minimal normally. Now you had three types of trades. You had very short-term trade. The first trade was to target neutral, which, as you can see, the market tends to bump up or below just around the neutral level, could just tick through it, but you'd cover it in there. But what we did know was that we hadn't made new daily highs on this break. So we knew we should really make new daily lows unless you were going to get an inside market day. And the previous day lows was 96.15. So we were actually looking for neutral to break. It did break. Now you had a 14-day momentum range trend line coming up here, and that came in at -20 below neutral. Neutral is 96.38. That's that figure up here. And you can see you had your -100, -200, -1 cent, -2 cent. Normally I have smaller lines in here so I can work it out. I've taken those out to make this clearer. But it was at -20, which was 96.18. Again, the previous day's low was 96.15. So you could have covered it in there in case it was an inside market day. We anticipated, though, with this turn down and the general pattern, that we should get a better move and a new daily low at least for day trade. We covered this in at 95.90, 25 ticks below the previous day's low, and also generally where you can see the low values have stopped on the day going back, it's in the general region, so it was worth covering at those levels. Now the longer term trade, as you see, we're looking for the bigger C leg. We knew we had an ABC, that was an A leg, and an ABC, a B leg. This did make slightly higher highs, but you can see it was diverging, and we broke down the next day. So we were at least looking for a little C leg down to here, so we could have gone a little bit lower and stayed short that for another day or so. The fact of the matter is this went down to 91.79 over the next week, the next 6 days. It created a big C leg, and would have been a 500 tick profit on a longer term trade. So you had the option where you went short at 75 to cover in at 38, which was a 37 tick trade. or at 18, which means a 57 tick trade, or at 58 below neutral, which would have given us 85 tick profit, or the longer term trade, which if you held for the week would have ended up with a 500 tick profit. I think this says it all. Really shows you the combination between all the trades, how you can work out where the trend lines are off the scale, the wave patterns that we're looking at, what we're expecting, and generally a good example of using all three charts to create a trade. This ends the tutorial on an example trade.